Good afternoon. Welcome back to Dan's Trades. As always, none of this is financial advice, purely for educational and/or entertainment purposes only. Read the fine print, pause the screen. All right. Today is June 26th, 2026. 6/26/26. That's a fun day. 5-minute chart here. We have the FX4M and the free PO3 to show the weekly, because inside the FX4M indicator stops at daily. I'd love to see a weekly and a monthly, David, in case you ever see this. I think I asked about it once. That'd be kind of cool. For the swing trading, give us the option. All right, so what do we got today here? So what do we got going on the week here? That's interesting. Let's go up to a 1-hour chart. And then we'll turn on the OHLC indicator. Take a look at the week. There's that NWOG that got tapped and ran through that. So there was previous week's low. That got smoked on Tuesday. So here's our weekly profile. Monday high of the week, Friday low of the week. I don't even think those are profiles that I see on my weekly list. So consolidation Thursday reversal? Not really. It's closest to consolidation Thursday reversal because we had a reversal on Thursday. Well, actually, we didn't have a reversal. We opened, went lower, had a reversal higher, then had a reversal on Tuesday. And this is interesting. Interesting weekly profile. But either way, we are bearish on the week. The weekly candle. Not going to show now. Does it not show on the hourly? Got to put on a 15-minute. Yeah, there it is. I haven't used that one in a while. So there's the whole week shown in one candle. So weekly, daily. The bias was bearish for today based on yesterday. TGIF was a beautiful trade this morning after we established the current low of the week in Asia. Massive range in Asia last night. Retraced. Expanded. Didn't take out the low though. Left the low of the week right there. So our TGIF is 20 to 30%, which is what these two lines are. Filled it right in, and we just actually broke down below it right now. Look at that 930. Gross. As soon as 10 o'clock hit. 955 in the macro. 950 macro, thank you very much. Because there's no macros. So after we made the current high of the day, excuse me, retracing, the high of the day was before Asia. Apologize. that's adding, so after Asia, the daily and the weekly is bearish. So we're looking for a retracement into that. If we throw a fib on that, not a time fib. Look at that retracement to consequent encroachment right in the London session. Traded lower. Pre-market session. Came and swept the London liquidity. Consolidated for a half an hour in the opening range. Ripping people's faces off either way. What do we got? 112 point range, give or take. That's enough to give people heartburn. They think it's going lower, they think it's going higher. It keeps consolidating, a bunch of inside bars, and then it rips on the macro. Comes up and takes out London. Then expands again, then retraces back to TGIF 0.3. Huh, interesting. Right before lunch. That's the lunch macro running there. I actually got into a trade here. Expecting lower prices, and I didn't want lower prices, so I turned around and took higher prices, and then I have been tape reading since. Then I started recording, so here we are. So we'll pull over the 1 minute chart here. And here we have the 30-minute open range gap indicator and the extended range, external range liquidity. But it's on the daily, so you're hardly seeing it, so I can just turn that one off right now. That's fine. But it does show us a nice premium discount for the day. But let's take a look. 1 minute. Whoops, not that button. Excuse me. There's the 950 macro in that red box. $9.56. So when we displaced out of it. Which is also displacing through the London open range overnight. Here's our first presentation displacement. There's midnight. So this line, midnight open. Interesting. Consolidating below midnight open, good place to collect longs. Fire up into the TGIF setup. Beautiful play. Too bad I wasn't at my charts. And like I mentioned, we started looking for lower prices. It said no, not yet. So we had a tight stop on, I believe it was right here. Let's take a look. I was basing it off. This macro, throw a fib on the macro at the time. Once we had a reversal inside the macro, relative equal highs. This was my thought process. Since I didn't record it live, I'm doing it after the fact. Buy side liquidity. Relative equal highs, came up and swept that. Swing low, displaced through it, leaving a fair value gap. Entry, looking for lower prices. Half standard deviation, line it up with this swing low. Target. I have one with all the targets already lined up. That was on the 15-second chart. Let me open this one up. Here we go. I was going to say I drew all this out already. This was the idea of the trade. So he'd swept buy side right here. Yes, we do have other buy side above and sell side below. Based on when and where we were, I was expecting lower prices. The market said not quite yet, Dan, so I had my invalidation right here, because that means it's another change of state of delivery, or reversal, I should say. And that's where I got stopped out. Perfectly fine. So I said, okay, you want to go higher? Let's go higher. Turned around and went long, targeting the buy side liquidity. We'll zoom in on this guy. Check it out. I mean, this is kind of fun. It's like literally the top tick. Can you see that? That's fantastic. Thank you. Selling on the top tick of that 15-second chart or candle, which is fine. And it was 665. I wanted 667 because I don't like 666. And then one more time. I like these bodies on this swing high. I like targeting bodies and not always waiting for the terminus all the way up. Nice smooth bodies right there. This is another nice target right now, right there. So we zoom that back over, and that's exactly where I got out. Boom. Then we got a few more points. And it fell out of bed. Slicing through these equal lows, displacing through this one. But then I was done, I had to leave. So this would have been where I could have re-engaged, was right here, right after this macro. This could have been a short right here. But if we want, this could have been the first viable short, because we did sweep through this swing low with displacement even after these. So you got two civvies. You have to take this into account. Stop's got to be up here if you're going to go short, or if I'm going to go short. Not advice for you. But I didn't have time to stay in front of the chart, so I just let it run. And this more than made up for that loss. So we're positive on the day, and we're happy with that. I mean, the first one's 20 points. I like getting at least 20 points, so 647.5 to 667. And then 637, 60 handles up to 697. But you can't time the market, that's for sure. I got pretty lucky on these. And then let's see what it does here. But actually, technically, this is not, I mean, by PD arrays it is, but not by my rules anymore. Just because this pattern's here doesn't mean you can take the short. Yes, it worked out, but my entry wouldn't be until at least a 15-minute change of state of delivery. So once we establish this down here, once we take out this sell side liquidity, taking this out, now we have a reversal again, or just a change of state of delivery where prices go the other way. We're now expecting lower prices again after higher prices here. So I was early thinking lower here. I got on sides after it changed. Then once we changed again, let the range establish, starts retracing, second run down after taking liquidity. Sibby, once these clear, watching the retracement, retraces all the way back to 75%. Displace down below, a swing low, re-engage, a consequent encroachment. Stop could be either all the way up here by hardcore rules, or I would probably actually cut it off there. If we displace above this, I would cut the trade off. Expecting price to come up here if it had, but just leaving this where it was there. I got to kind of set up where I would take partials. First one retracing back here. You could even take a partial here if you wanted to. Because 640 to, that's nice 40 handles, so just like I like taking 20 handles off. I wouldn't be surprised if I'd take one off right here, clearing this. I say that because I wasn't here in front of the trade, I wasn't actively trading it, but clearly that's how I operate. 20 handles, pull it off. And this is 23 handles, so you know I'd be taking a partial right here. So actually, this could be, we'll slide this over, watch this. And copy it. You can even wait till right here if you want. It's going to be right there. 23 handles, give or take. So I probably wouldn't do a 36. It'd be like the 1-to-1. So yeah, that's why this would be in this neighborhood. If it broke through mean threshold of this order block, we'd cut the trade. So these are all more than what I would run for a stop. And then here's the partials at the 0 line. Sell side liquidity. Run that over. Got taken out right there. Retraced back to 0. Expanded. And this is just leaving that right there. Now I'm not even expanding it down every time, just leaving that dealing range. So it's all based off this dealing range that established in the retracement, and then we moved. Then here's half standard deviation from that original range. Nice partial there. More sell side liquidity. Swing low. Previous time period. Took that out. Notice it retraces every time it takes out this liquidity. Strange. And then shooting for -1. Didn't quite give it. Sitting right there right now. Retrace back up. Now we're consolidating. Here's the final sell side on the days right here. That's a nice run. I mean, the first one we got 20 handles, 65 handles, 136, 175, 164. Oh no, it's open right now. Yep. That's a nice run. And I'm plenty happy with just that, but check it out. This is my read, and there's where it did. If we were to move this to the current, that's good encroachment lined up nicely there. And then if we check out here's what it looks like. If we zoom in. So this was the original idea. Consolidating. Retrace back to fair value. I'll switch this back to 25. I had it set up for TGIF. So there's the getting back in at fair value. Adding on inside of this area. Expecting it. I was waiting for down here, so I didn't take one off right there. Because I want at least the 20, so 12 down to 32 I would have been. Or no, excuse me. 92. 94 is where it got, so that's why we never hit the first target before it came back up and stopped me out right here. So yeah, I did have profits, but I chose not to cut it off. Let the rules, let it play out, and I let it stop me out on the reversal. And immediately reversed two into a long, took it out there and there. I mean, I'm pretty happy with that because then it did that. And I don't need to try and reverse immediately and then be wrong and keep going. So it's amazing. Thank you. Love it. And we're coming up on the macro and the market on close. So maybe we'll tape read it and see what happens here. Oh, it's curiosity. Where's the, pull up this one. And naked chart. Huh. I seem to remember ICT talking about you'll make all your money between 250 and 70.50 or 25 and 75. It's a nice run in between that. It's just standard market operations. All right. I like seeing the sessions. Huge Asian session yesterday. After a nice retracement, after that huge drop. So there's the Asian session measured. I mean, seriously. OTE in Asia. Hello. Wow. It's random. It's all random. The 1 minute's fun to watch with just that one on too. This is a free indicator. Crazy. All right, 1447. 3 minutes to the market on close macro. We got a nice pool of liquidity right here, and we're below that weekly. Huge drop. Here comes 4 standard deviations from my original trade. Huh. That might be random too. PM. First presentation. If it sweeps this, reverses come back around, it might be a nice rocket ship up for the market on close. If we change this to hourly instead of daily, let's take a look and see what that looks like. Yeah, we've filled up a lot of sell side. Buy side's looking interesting. I'm not taking anything. 1 more minute. It's just fun to watch. I do like seeing the FX4 model at the same time. This is a 5 minute. These are 15. These are hours. So the final hour is bearish. Got a swing high. Here we go, 10 seconds. Five, 15, 30 second, 45 seconds. So sub-minute charts at the bottom. Coming down for previous 4-hour low. Definitely looks like it's going to sweep that. What's the 4-hour? Yeah, right there. Interesting. That's getting nailed. Or is it? Let's see. Inverted then reclaimed on the 5-second chart on that final PD array. Relative equal lows. That's looking like it should still come further down. If we're going to tag this at 29,409. Yeah, it's a lackluster market on close because we've already done all the work. All the business is done. It's just going to be lazy. Unless it takes off in the middle. We'll see. It's fun just to tape read. "45-second still hasn't inverted it. It's wicked above it, but it hasn't closed above it. It has to close above it to be an inversion fair value gap. And here's a 1 minute. Look at it honoring that SIBI right there. That's saying we're still in lower order flow, lower prices. Until it inverts something, it's bearish. 76543. See where this closes. Look at that. See how it's lying to you? It's baiting you to go long. You have 45 more seconds to close above there. That's a long time. Trust me. Doesn't sound like a lot, but it sure is when you're trading, if you're not ready for things. All right, so we've inverted a 5-second, but that doesn't mean nothing. We could just be retracing to get some liquidity because we just took external liquidity on an hourly basis. Hence what it's doing. See, it comes right back down. 14, 15 seconds. See, it's baiting to go long, isn't it? Not taking the bait, Chachi. Look at that. Look at the body. 3, 2, 1. Ooh. Right on it. Coming for prices right here. Consequent encroachment of this wick. Relative equal lows. Smash right through it. Go lower. You know, it wants to come and get this 4-hour low. It's just too juicy right there. Big magnet right there. Draw on liquidity. See, now I got lower prices. We just took out that. It'll come back and get some liquidity again because we just took an external range. Five-second BISI. 15-second inversion. Coming right back over it. See, the sub-minutes will just come and reclaim stuff, but the higher ones, the 1 minute still honoring it. It might not here, we'll see. Still got 30 seconds. Taking out stops. Anyone's that chasing it short. People that like to chase price get smoked like that. It's a 20-point stop hunt. Just random static price action. $450 down to $420. See it? So where's it going to close now? 4, 3, 2, 1. That's a little scuffy. She's going lower. It's playing games. It's mind game market on close. Look at that. $15-second balanced price range. Where's the body going to stay? 30 seconds, a little bit gross. It's definitely not real clean. 1 minute's pretty clean. We're halfway through. It's 14:55 now. 5-minute chart. We got a SIBI. 1 minute, we still got that SIBI. Relative equal lows. This 4-hour low is looking. Oh, well, now we finally closed above. That's just bait. 45-second. Let's see what the 1 minute does. Tap the 5-minute high. Consequent encroachment of that SIBI. Previous low of an up-close candle. Up-close candles should support price staying lower if it's going to stay bearish. And this did displace as it took it out, so this can be viewed as an order block, meaning threshold should not be crossed, which is close to lining up to where CE that wick is too. So a couple PD rays stacked up right there. That'd be a nice stop if you were actually short, chasing price down, but I'm not doing that. Look at the 1 minute, closed above. See if it changes state of delivery again. If it gets below this, that's no longer valid. Very close. $428.50. 4, 3, 2, 1. It stayed above, but we've closed below, so it's reclaimed SIBI now. So if it comes up, it should repel. Price lower. If the logic is going to hold, if not, it'll reclaim it. Go to the top side. That's how you use this. That's how the logic functions. 29,417, and then down here. 409. Come and get it. Hello. Can't time the market. Quadrant. London open range. High. We're back to it. There's midnight. Buy below midnight would be a beautiful place to close that short if anyone's in one. I know I'm not live. No one's listening. It doesn't matter. It's not advice, but I'm just saying it would be a sweet to close below midnight, but I would take all that. If I were in, I would be out. Don't be greedy. That was a nice run. Previous 4-hour, boom. And it'd be done. Close it up shop. There's another 45-second SIBI. It might scream back over it in the last minute here. We'll see. Doesn't matter anymore. This day is done. Goose is cooked. Final minute. Swept that swing. 5-second chart, 15-second. Yeah, consolidation on the 15. Another week in the books. All right. was fun. Now the market's technically done, but it'll still move. Oh, sorry, 15 more seconds. I thought I saw something say. Tapped into the SIBI on the final couple seconds. And ding, 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 ding. That's a nice run shorter. Close out the day. All right, that's all there is. Have a great week. Remember, tomorrow is promised for no one. Live for today and praise the Lord. Amen. Well, we're back, and I have clearly lost my mind because I thought it was the end of the day, and I'm an hour off. I've never done that before. That's wild. That explains why the market on close wasn't as active as it usually is, because it wasn't the market on close yet, Dan, you dingaling. It was the 50-10 macro for the 2 to 3 hour in New York. Apparently I must have thought I was changing time zones or something. So here we are back. That was the end of that nice run, though, because look how it runs end in macros, and then it did come back up. So now we're in 15:15 to 15:45. Final hour, regular trading hours macro. And I'm going to be heading out soon, so I'll probably just let this record by itself. I don't think I'll just shutter them all. And we'll just let that go. Let's see what this does. See if it'll track. Testing. It's a nice cell program that we recorded through in the first one, isn't it? Still can't believe I was off by an hour. That's just wild. That blows my mind. I didn't realize it. I literally just watched everything, just reviewing it before I posted it, and I was like, I clearly can't post that because that's not right. All right, let's see if this tracks so I can walk away in a little bit. Yep, this one's going to track, so that's good. That one's going to follow. There's always a setting that I haven't found or dug out yet that keeps that in. Looks like the bottom ones are all working. That's good. See if the 1 minute one stays. Just going to the opening range low again there. It's a nice reaction off of the AM opening range high and this inverted fair value gap. That's a beautiful minute right there. 50 point minute. In and out. Here comes the opening range low. Here's that previous 4-hour low. So now it's 395. There's the open range low. Tag that. Nice liquidity pool. Remember we were talking about that? Just added on to it. All right, so this is going to stay in. That's good. These are all going to stay in. That's good. I think I can leave it. All right, enjoy watching price, and I'll be back later. All right, I'm still here. Market on close. This is more what we're supposed to be seeing. Thank you very much. High resistance 15-minute. That's making look at all this liquidity is coming for right here. Final hour macro. Liquidity, 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 liquidity. Boom. Must be random also. Just tap this low. What's the low of this? 423.75. 420.50. 3 points lower. Job's done. It's a 1 hour Sibi right there. Watch this. We draw this in. I can't tell. It doesn't look like there's a volume imbalance there, so we're just going to draw as a box. This would be one of these. It's going encroachment. Hello. Reclaim Sibi from last night. Oh, 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 oh. Just to see how that works, we'll just watch. Right there. It's this one. See that? Boom. This is the question to ask. There's 4 phases of a fair value gap, Michael said. First utilization, Sibi, we got it. Closes above, can be an inversion. That technically closed above, but I don't know, that's pretty scuffy. That might be like a mohawk body. So the question is we have first utilization, which is standard, inversion, which is when it gets inverted, obviously, and price goes the opposite. Then we have reclaimed. What's the 4th? Because there's something to it gets used to consequent encroachment here as part of the first utilization. Maybe the other one is aisle fed. No, it's just a institutional order flow entry drill is when it's 1 tick above candle 3 for an entry, which is interesting when you think about it because that's technically changing the state of delivery, or excuse me, it's technically a reversal and a change state of delivery because it's going the other way, but then it rips the other way. So that's interesting in the brain to think about that. Look, it came up and tapped that and it dropped right back down. So now you can see how you can kind of work backwards and using the indicator instead of having to worry about finding that back here. Like you can't see that on a 5-minute chart unless you're Michael himself or some people that have been doing this for over 10 years. You can see that hourly busy, then you're better than I am. Or Sibi, excuse me. But there's to this wick. It's also price action. It's the other reason that we don't want to see it come up. And why this is a breakaway gap. Because it's higher time frame. That's so awesome. Don't tell anybody. Because here, it didn't function. It came right down to CE. During lunch, I wonder what that 4th phase of a fair value gap is, Michael. If you ever hear this, curious. He's not watching my videos, I know. Anything's possible, though, through Christ. And if you have faith. 5 minutes. I was supposed to be leaving, but the kids don't want to leave yet, so I can still watch. There's 2.5 and 4 standard deviations of that original trade before. There's too many lines, though. That's a much more animated market on close. $115 points, give or take. It's definitely respecting that civvy. Close right on midnight. We got some low resistance right here. $29,395 is the current low. 50 points away, 40 points away. Is it time?
Yeah.
Okay.
come in and say, you know, this is what time I got in, this is what the price was, this was the exact amount of points that I was willing to give up. I was willing to sit and draw down for 3 points on ES because I wanted 21 points. So whatever, you got 3 points.
All right, check it out. I don't know if this is recorded or not, but we're listening to the
you'd be willing to
trader roundup. What did we do when I was gone?
Or 5 out of that, or whatever it is. I don't know. Whatever it is for you. Everyone's going to be different, so it's hard for me to really apply anything.
Computer's coming back to sleep, or coming back from being asleep.
Give up, if I want to see, or I'm willing to give up 3
there we go.
Drawdown,
oh, it came right down in the first presentation displacement. That's a fantastic move. Nice.
That's another way of journaling. So
told you we were looking for lower prices.
What are the accountant sides, the actual numbers?
Nice move up, grab liquidity. Left the PM session. That's kind of cool.
That's part of your journal. The other part is how you feel. Does that make sense?
London open range low.
How do you think you
25 minutes left.
Kind of how I just said it.
I mean, you don't trade this, but it's just kind of interesting to see where they're going to leave it, because that'll be the first PD array in the NWOG. It's wherever the close is. Look at this movement at aftermarket. Buying pressure all the way up here.
How far we went into Jordan, the whole cycle.
Asia, London, pre-market, New York AM, lunch, PM. It's a nice retracement. That 1 hourly fair value gap. Very interesting. Look at it, tapped it. CE. That's what we were watching before, right? Yep. There's another one right here. That's interesting because it's where's my glasses? Here we go. Where is this from? 21. So 10 o'clock last night. Drop back to the hourly. Do this again. Pretty close, huh? We don't deal in close, though. See how price did with this. That's kind of interesting, isn't it? Look at that. That's just wild. I mean, Come on. Are you kidding me? Hello? Think that's not a clue? Interesting. Look at this. Interesting lens. Thank you, Michael. And what do we got? 20 minutes still? Look at that market on close macro. That's awesome. Which minute was this? 15:59. Nice. This was good enough. This is fantastic. Interesting, just off of that macro, right? Huh. You ever measured a macro before? Check it out. That one's moving too. Wow. You got the change in state, reversal, OTE. Bye-bye. Bye-bye. Thanks for playing. Huh. Well, let's... hello? Hello? One standard deviation off of the lunch macro that ended. London open low. We're back where it all began. And you're trying to tell me that this is random buying and selling pressure. I mean, I find that so interesting, so funny. Here's my little scalps last night. Buy, 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 sell, sell, sell. I was literally just testing the broker because I just turned on a new broker account, but you don't care because you didn't listen this long. If you're here, good job. But I was so happy to see this. Because look at this. Look at this. I scalped one. Just testing executions on this broker. And then I took another one. I saw there's a couple more. And I said, okay, I gotta hit the road. I gotta do something. Then it literally ripped because here was the target. Was like these bodies. Remember how I like trading for it? Would have missed it, but I would have I would have marketed it out. Look at that. Look at how close that got. I would have been like, come on, man. That is just sexy. I was happy with the tiny little scalp, just execution testing. But I had to draw. That's why I like taking these. This would have been absolutely been a partial, 1000%. Another partial here. Probably one right there. I would have taken another one. Because I love taking partials right now. Because I don't trust this for Jack Diddley. Because look at the market. But when you know how to read it, it's amazing. Thank you. Then I wasn't even in front of the market, in front of the screen. I said, I want a short. I said, okay, you don't want a short? Got stopped out and I grabbed that one. So there it is. I don't like the trading still. I mean, I'm gonna record it better next time, but just saying. The reason I didn't re-enter after this was I didn't like that they hadn't taken this high. So most likely curious. Last up close candle here. Huh. Random. There's the exit. That's just, thank you. So that's probably some type of breaker. I don't do breakers, but I know there's a swing low here and there's a swing low here that's lower, so I think that's a high, low, lower, low. If I look at my cheat sheet, I don't use breakers. It's probably something. Or it's an inverted bullish breaker and it's lower price. It's one of the two. It's either a bearish breaker or an inverted bullish breaker, one of the two. But it's the last up close candle after sweeping this liquidity from the AM session. That it didn't even close at consequent encroachment. Had it taken that, I would have been more inclined to follow the trade. But I, again, had to leave, so it is what it is. I'm perfectly happy with that. But this is a banger trade down because I know I wanted the lower prices. I was just a tick early, so now I know better to reverse my move, know when to get out, clearly. And I was happy tape reading this. So look at that. I would not have lived through this. If I'm down to the standard deviation, I'm not living through that much of a retracement. There's no way. 170 points? Nope. I would have been all right here. If not here. I hate retracements. I hate giving money back to the market. All right. What time is it? 15 more minutes. Now it's below that opening. Now it's down to a quadrant level. Dude, if it slams down here, it's going to be awesome. That would be so cool. But I don't think it's going to. That would be sweet, though. It's below this, the macro now, so. What's the daily chart looking like? We don't need those anymore. Interesting. Stab below it, but it's closing above, so that's high resistance, the way David qualifies it. But we also have this for the inversion, Sibi. That was a nice move. These are looking juicy. What is happening to the price right now? Why are you freaking out, man? Is this the minute chart? Yeah. Why is it doing that? Whatever. I can end this, but if you're actually here listening, have a great week. I should say, have a great weekend, because we made it. Take care, and God bless.